The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading to kick off the week, and we got markets picking up right where we left off last week. We'll put it on a 15-minute. You got the S&Ps right now up by 14 points. We'll call it a 57.75. You made the acceleration Thursday. Market chops around a bit on Friday, and we are now above anywhere we were intraday on Friday. And you see the acceleration overnight, right? 3 a.m. Eastern Time, we drive down to 57.45 in the S&Ps. We're a solid 30 points above that spike low in the overnight on the S&Ps right now, trading at 57.75 right now. You jump over the NASDAQ 100, we're positive by 63 points, 20,092. Dow right now, positive by 59, 42,502. And the Russell, up by 0.5%, positive by 11 points. Bitcoin, up almost $500 on the weekend. Last night, you almost make it to 65,000. We've paired those gains a bit. We're at 63,370. Crude chopping around near $71, right where we were at the highs of Thursday. That's where we were on Friday. We're positive by 23 pennies right now on the price of a barrel of crude. And gold up by $7 right now. We make a new all-time high in the overnight session of $26.56, and we're only about $2.50. $2.50 actually the penny. And look at this run we're getting as gold climbing towards all-time highs yet again. Silver, negative 27 cents right now, actually, 31.23. And we jump to the all-important notes and bonds, and it is interesting where we are. Where are we? We're at lower price and higher yield, and we got the 10-year at 3.77%. Absolutely remarkable when you look at where we are, where we were last week prior to the Fed cutting by 50 basis points. But guess what? A lot of that was priced in. We saw it. We got a cut of 50 basis points. The cutting cycle begins, and markets actually trade higher on the heels. Yields actually go higher on the heels of a 50 basis point cut. We jump over to the dollar index. We got a little bit of higher yields today, but that's not stopping a little bit of weakness in the dollar. We're back below 101. We're at 100.90. We are positive, though, because, boy, that was quite an acceleration we got at 3 in the morning as well. Now, over in Europe right now, you get the DAX up about 0.7%. FTSE is flat. CAC rolls flat as well. Over in Asia right now, we have the Nikkei up 1.5% right now. Hang Seng basically flat. Shanghai positive by about 0.4% right now. All right, where are we going to kick things off today? We're going to kick it off with Intel. Why not? Excuse me. So Intel, yeah, it looks like they may have a buyer in Qualcomm, was the news on Friday. That's your acceleration there from about 2040 to 23. Then the news hits just this morning that Apollo wants to invest up to $5 billion in them. That's following the news last week, of course, that you had that, number one, they had secured a deal for additional financing and grants from the government. I mean, it was a heck of a week all around. And when you look at the type of big money trying to put money in play with Intel, you got to start paying attention to a certain degree. Now, thought I had it up here. Yeah, there it is. I was reading it. Where are we? There it is, right there. I thought I had it up. Yeah, so Apollo to offer multi-billion-dollar investment in Intel. And the number there is up to $5 billion. There it is. Investment of as much as $5 billion in Intel. The size of the investment could change, or discussions could fall apart. We're still in the early phase. Now, Intel, you take a look at the longer-term chart, right? You talk about problems, man. But, yeah, I would say that you're seeing astute investors, as in smart money, is coming in at these price levels. You check out Qualcomm. They drive lower on Friday, continuing that acceleration right now. They're lower. They're going to be the potential suitor for Intel out there with Apollo, saying, hey, you know what? Maybe you don't have to sell to Qualcomm. Why don't you just let us give you $5 billion for equity in the company? There's a little bit of a battle here to get in on Intel. I've started paying attention, which is intriguing because up until about 8 days ago, said, be careful, man. And it seems like at these valuations, all right, where are we talking about? $95 billion right now. Yeah, that's a valuation to get into the chip sector. I think a lot of people, you talk about $95 billion, you're getting tons of stimulus from the government, and you're at a valuation now that probably makes sense at $95 billion. Nonetheless, intriguing as you wake up yet again, and there is a battle to gain access to the equity of Intel shares. Apollo wants action. They want up to $5 billion of action now. Pretty remarkable. All right, we go back to big picture. We talk a little bit of Fed speak. So we got some Fed speak this morning. We'll kick it off with Raphael Bostic, Atlanta Fed chief, remains watchful for return of inflation. I mean, that's what any Fed president or chief is going to say at this point, right? Starting the central bank's cutting cycle with a large move will help bring interest rates closer to neutral levels as the risks between inflation and employment become more balanced. I mean, here's the kicker. The reason why I kick it off with that is we all know this stuff, right? It's going to be the small nuance of whether they're ahead of the curve, how hard is the lag, how hard is the lag going to be to roll over in terms of to change the momentum of a potentially weakening economy. But officials should not commit to a cadence of outsized moves given uncertainty over where the so-called neutral rate is, right? My residual concern about inflation might have led me to settle on a relatively small first move, say 25, but such a move would belie growing uncertainty about the trajectory of the labor market. Yeah, well, we kind of all know that, right? He said he was encouraged by data showing inflation falling faster than he expected at 2.5%. The Fed's preferred inflation gauge, the PCE, is close to 2%. It is. We'll see what that last 0.5% is and how things are going to play out with the cuts coming down the line. Excuse me. Price increases are narrowing, and core PCE annualized 1.7 for the 3 months through July he was talking about. It's a valid argument, right? That's the argument for why they went 50. Projections released at the conclusion of the Fed's two-day meeting last week showed a slim majority of officials favored cutting rates by an additional half point over their 2 remaining sessions this year. Yeah, Bostic said earlier this month that the central bank's 2 mandates, what are they? Price stability and full employment, okay, had come into balance for the first time since 2021, not quite prepared to declare victory over inflation. I mean, why would you ever, right? That's where experience, history, all this stuff plays out. If you've been around long enough, you've seen people. Let me see. And to my producer, can you check on sound in the den? They don't have any sound in the den, unfortunately. Yeah, check that out, please. Bostic said earlier this month that the central bank's 2 mandates, not quite prepared to declare victory. Who would declare victory, right? Mission accomplished. Nobody wants to put a mission accomplished banner behind their head, as we know. Hindsight, of course, as it goes, but nonetheless. And then you got Neil Kashkari, Minneapolis Fed chief, says risks now tilted towards the labor market. Significant progress has been made lowering inflation. I would agree. But are they a little bit late? That's more of the gamble, right? I think we all agree the risks are now weighted to the economy versus the risk weighted to soaring inflation. But did they cut in time? We will find out. We got the S&Ps up by 9, NASDAQ 100 up by 39, all the markets in the positive. We got gold climbing towards record highs. Stay tuned, folks. We'll be right back after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. I apologize. Didn't realize we had no sound there. I was live. I was going through the charts. That is a bummer. We will make sure that does not happen again, folks. Going to make sure those producers are monitoring that, man. What's going on? It's Monday morning. Let's kick back into the action, though. We get the S&Ps in positive territory right now. S&Ps up by 9. NASDAQ 100 up by 40. Dow up by 42. Russell right now up by 10. We take a look at gold. Climbing towards the all-time highs we made at about 2 a.m. Eastern Time, 26.56 in the overnight session. We're trading right now at 26.52 in the gold contract. You talk about it, man. Quite a run. And so coming into that break, we were talking about a little Fed speak. So you talk about a little Fed speak with Bostic. You have Bostic out there. Atlanta Fed chief remains watchful for return to inflation, right? Just a lot of hedging of their bets, and justifiably so. No one is going to put a mission accomplished banner behind their heads, folks, especially if you're on the Fed, right? So, yes, they're talking about the risks are now weighted more so to the labor market versus prices, right? But nonetheless, we'll get to see where we go. Atlanta Fed President Raphael Bostic said Monday that starting the central bank's cutting cycle with a large move will help bring interest rates closer to neutral levels as the risks between inflation and employment become more balanced. I would say so. The other thing I was talking about there at the kickoff, how about Intel, right? So Intel goes from last week, they come out, they're going to get more government funding. They rise up to 23.30, you give it up a bit, and then the news on Friday. So Qualcomm potentially making a bid for Intel. There's your acceleration on Friday, and then the news this morning is that Apollo is up to $5 billion is what they're going to be putting potentially into Intel for equity. Intel right now, about a $95 billion company. But boy, it's going to be interesting to see how they open, as you got the pop on Friday from the Qualcomm news right at about 3 o'clock. Then you have the pop this morning on that Apollo. They want in on the action as well. Not sure what the give up there was at about 8 or 8:30. Nonetheless, quite an acceleration. You jump over to Qualcomm shares, not quite as rejoiceful, as they're going to be the ones potentially spending that money. There was your acceleration on the news that they may be going after Intel shares on Friday. You're a little bit lower this morning as well. We're trading at 166.51, down from 168.92 on Qualcomm. Jump over to Dell shares. Dell going into the S&P 500 today. A lot of that already built in. Look at this volatility, man. From last year in the 30s up to 179. You give it up to 87 bucks. We're going to open today about 117. We put it back on a daily. Yeah, you talk about it, man. Quite a run. Now, Dell, talk about like a second coming. $82.5 billion company. Pretty interesting, right? Basically almost the same size as Intel shares in that context. All right, nonetheless, let's jump around, see what we got going on. The Magnificent Seven. You're going to have Apple shares a little bit lower in the pre-market. Look at that drop off, man, from 233 down to 228 on Friday. We're trading right now at 226.94. Yeah, what do they got going on here? Quite the acceleration indeed. You jump over to Microsoft shares. Trading a little bit lower as well. Microsoft down $2, man. Not often you pull up the pre-market charts. You got Apple down a couple dollars. You got Microsoft down a couple dollars. And then nonetheless, what do we got? We got markets green across the board right now. You jump over to Google shares. Whoops. G is their symbol. Alphabet. Going to be slightly positive to 165. Meta shares this morning. There's a pop for you, up by $7. You jump over to NVIDIA shares right now, trading at 116. And yeah, couldn't help but talk about Microsoft, man. I was talking about it with my dad as well last week. I mean, pretty remarkable when you talk about securing exclusive rights to a nuclear reactor until the year 2028. Folks, I mean, what is the world going to, 2048. The plant, 3 Mile Island, is going to come online in 2028. They get 20 years of it till 2048. Can't even imagine what the world is going to be like, let alone the energy consumption necessary. You jump over to Tesla shares this morning. They're up by about $4 to 242 for Tesla. Boeing shares trading at about 153 right now. Jump over to Nike. Quite the acceleration as they have a new CEO last week. Up to 89.50. We're back to 85.38 for Nike shares right now. We jump over to Starbucks shares, trading at $96. All right, let's see what else we got pulled up here. Let's talk a little bit of rates, okay? Let's see. That's not the one we wanted. Yes, this is the one we want. All right. Here's what happens to markets when interest rates fall in charts. I like charts. Visual representations go a long way. And what's very apparent here is it's all about the economy, okay? You can look back at history, and this is what this does. What happens when the Fed begins their cutting cycles, and how does the market perform? Well, guess what? As long as the economy is doing well, the market loves a Fed that's cutting with an underlying strong economy. What the market does not love is a Fed that is cutting on the premise that they need to save a weakening economy, right? So history shows some of the prospects for stocks, bonds, and other investments. This is the S&P 500 one-year performance following the first in a series of rate cuts, which we are in right now, okay? They go back to 84, 89, 95, 98, 2001, and then look at how we had, what's intriguing here I found. So between 1984 and 2001, you had 5 different times that they went on a series of cuts. And think about it. We've only had twice in the last 23 years. So in the span of 17 years, they go 5 times. And then over the period of 23 years, we've only been twice. You could add the 2 on the outside, you're going to make it 4. But nonetheless, you can see, right? Things have been going very well since 2001, since 2008, especially in this market. There's your 2019. Now, what's intriguing is the 2 times that things went really bad, dot-com bubble and the financial crisis. Down 10% and 17% annually on those numbers. And really, the 2001 dot-com, you can see it was down much worse, and it just got saved a little bit by a little bit of a rebound in the year. So you were probably down on the heels of that cut, 17%, 18%. But look at the other numbers, man. If the economy holds up well, big time years across the board, and that's basically what it's going to come down to. You can talk about treasuries, you can talk about everything else. The economy is going to define this market going forward. And yeah, we get to see where we go from there, right? Yeah, they talk about, we all know where it's going to go in terms of, in reality, the dollar tends to weaken, gold, excuse me, tends to benefit. We know how those relationships go. We go over them often, but it is intriguing to see. I mean, look at, if you just take the dot-com bubble and the financial crisis out of the equation, and you can't do that, okay? You can't do that because those are important ones. That's part of the reason why the Fed's begun cutting. But if you take those out of the equation, which were pretty exceptional events, dot-com bubble, financial crisis, market's going up. We will see, though. We will see. We got a lot of variables in play. All right, folks, stay tuned. We're coming back for the opening bell. It's Monday. We got markets in positive territory. Don't go away. We'll be right back, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
welcome back, folks. We got markets open. You got an S&P opens the trading week up 10 points right now, trading at 57.71, just off the all-time highs made on Thursday. NASDAQ 100 positive by 39 points right now, and it is intriguing when you jump around. You got Apple shares down by about 0.4% right now. Microsoft down by 0.25% right now. There's a bid for you. How about Meta? Man, this stock is just gangbusters. Let's put this thing on a daily. Look at this Meta chart, man. Just since August 5th, right? When they talk about buying the dip, Meta is up $120. What is that? That's bonkers. 45 bucks would be 10% off that August 5th low. 90 would be 20. 135 would be 30, and you're up 120. 25%, something like that on an equity like Meta over the span of about 6 weeks, buying that August 5th low, which just traded down to July. Boy, Meta, remarkably strong. You jump over to Google shares, positive by a percentage point as well. We jump out to NVIDIA, up by 6 cents. We check in on Intel. 22.50 for Intel shares as Apollo. All right, there's the article. Apollo to offer a multi-billion-dollar investment into Intel. Investment firm offered equity-like investment. The move comes as the rival Qualcomm makes an approach about a takeover. What they do talk about is you might have some antitrust issues. I'm not in the know enough to understand the nuances of antitrust and whether that's actually a problem. This is always where the truth lies somewhere in between, right? In between. It's all about the details. It's all about the nuance, because you could see how everything almost gets political these days, right? Oh, the government, the regulations are too tough. They're clamping down on businesses, right? So there's two aspects. You say, okay, if Qualcomm takes over Intel, maybe they face some anti-competitive. But the other side of that is Intel's about to go BK, man, right? That's where things get, they're about to go BK, and not about, okay? But you are talking about a company that was valued at $70-80 billion recently, down dramatically, and their plan to succeed is laying off 15,000 workers and then just creating the technology to compete with the most highly selective, technologically advanced companies in the world, so the likes of NVIDIA, AMD, etc., chip making. Nonetheless, yeah, they're going to come in. They're going to try and offer up to $5 billion. And yeah, Intel's value continues to plummet amid the AI chip boom. Not exactly how it was supposed to go, right? But you got Intel at $93 billion, and you got Qualcomm at $188 billion. Where did they start the year? Intel was at $200 billion and Qualcomm was at $152. NVIDIA was at $1.2 trillion. They've been leaps and bounds. But yeah, pretty remarkable. You start the year with Intel at 200, Qualcomm at 150. You make it to the end of the year, and somebody at Qualcomm goes, hey, Intel at $93 billion when we're pushing 200 might not be the worst idea ever. And yeah, we got some higher action. We'll keep our eye on Intel today as we got markets in positive territory. All right, let's check in on that gold contract as we're right near all-time highs for gold as well. Gold trading at 26.52. We keep our eye on the dollar, driving some of that action. We got a little bit of a weaker dollar. That's going to help the gold contract. You spike all the way up to 101.20. That high made at about 4 a.m. Eastern time. Okay. Now, what was going on is, check out all the charts, right? So you have the S&P drive lower around the European Open, 3 a.m. Eastern time. At the same time, you had the dollar go right at 3, right? You strengthen to 101.20. You jump over to the euro US dollar for some currency action. There's a breakaway for you, and that's driving some of that action from 111.7, you could say, down to 110.9. You're back right in the middle of that range right now for the euro US dollar. We check in on the dollar yen. And the yen pushing about 144 so far this morning. All right, jump around. We got Disney shares down about 0.5% right now. Amazon shares down about 0.25%. We make a high of 192.40 in the pre-market. We're just off that level at 191.24 as we get the market pairing things a bit with the S&P's up by about 6. And we take a look. NASDAQ 100. What's in the green right now? We got Broadcom up about 2.2% right now. How about CrowdStrike? What's going on? Is that I think I got to reset this sometimes. What does happen with this Thinkorswim platform, folks, I don't know how this works. Maybe you got to reset it on the open. If somebody has any keys to this, because this is not right now. Somehow they have the heat map going on, and it's not showing accurate data. Yeah. CrowdStrike down 0.6% right now. We jump around to some other ones. You get Salesforce right now, down about 0.2%. Then we're talking about Salesforce, I think. Was it last week in the Tigers Den? Yeah, you make a double top at about 311. 318 is the spike high on Salesforce. Look at this, though, right? 311 back here. You drive through there on a tail. You don't even get a body. And then you trade from 311 down to 212. Salesforce trading at 265 so far this morning. All right, let's see what else we got pulled up. Yeah, we were talking about this article in terms of what happens, but this one's a little bit more interesting from just a theory perspective of where we go from here. And this is talking about the rate cut won't save. Oh no, I'm sorry. We'll get to that one as well, but this is the one I wanted to get to. The rate cut happened. Not all borrowing costs are going down, right? And as we talked about, the rate cut happens, and where are we on the 10-year? The 10-year has gone up. As we've had lower price from where we were on Wednesday, which correlates to higher yield. We're talking about a 10-year yield right now, which is at 3.76%. The yield on the 10-year, we're at 114.20. And it is interesting when you look at this thing longer term perspective, right? You're at quite a level, of course, at 114.20. You look at anywhere on this chart, right? Now, this is going to be intriguing. This is the 10-year, okay? And this is the 10-year as far as it goes back on my Thinkorswim platform, which brings it back to about 2002. What's intriguing is the 30-year goes back further. We're going to jump to that one next. But if you take a look at this chart, intuitively, you say to yourself, well, geez, it looks like we're going to go back to higher price anywhere we were prior to about 2022 up until 2008, you were in a period of higher price and lower yield. Looks like that's where yields are heading back to, okay? Only a few times on this chart have we been in a period of lower price and higher yield than where we are right now, right? And we were just there. We were just at 5% 10-year, etc. But if you take a look at the 30-year for some context, okay, you could say we have some recency bias of the 0% interest environment that we all became accustomed to following the 2008 financial crisis. I'm not sure we're going back to that, right? That neutral rate of growth, the R star, higher for longer. Look at the 30-year. You go back, and many times actually, we were in a period of lower price and higher yield in the 30. We'll finish this conversation up, folks. We'll take a look at some other equities. Don't go away.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got all the markets in positive territory. S&P's up by 7. NASDAQ 100, we give it up slightly. We're still up by 20. So just to finish up that conversation, because you look at where the market is, what it's priced for, right? We were talking about this article to begin with, talking about the rate cut happened. Not all borrowing costs are going down. And what it talks about is the same thing that we're talking about to a certain degree, right? The 10-year Treasury has actually risen. Okay, you have the head of Treasuries at Vanguard, John Medziar, said his team is betting that yields will likely rise a little more, noting that the market is still positioned for rates to go lower than most Fed officials are themselves projecting. If the market is pricing in a dramatic level of cuts and we get a 50 basis point cut, but that's not enough and yields rise, think about what that says in terms of what is actually priced into this market. Now, we pull up the CME FedWatch tool, which is interesting just to see what is priced into this market. And right now, for the next meeting, they're looking at almost a 50-50, slightly higher probability that they go 25 at the upcoming meeting, then they go 50, rather than they go 50, which is at about 46%. You get to December, though, and by December, there's a 50% chance that somehow they go 75 basis points over the next 2 meetings, right? That they either go 50, 25, or they go 25 and they go 50 again. What really gets intriguing is you start going out to like June of next year, which is less than 9 months away. Right now, we are at 4.75 to 5. Let's just quote the lower boundary of that range. We're at 4.75% is where the Fed is. That's the lower boundary on their range. There's a 25% chance they cut by 2 full percentage points. And folks, that's only over the next 6 meetings. And there's a 34% chance they cut by 1.75. Again, over the next 6 meetings. Right? So they could go 50 and then go 25 every meeting after that. And you'd be at 1.75%, which puts you at about 3 to 3.25. And there's a 25% chance that they're going to go faster than that, which is remarkable. You'd go 25. Yeah, if you go 25 and then you go, if you go 50 on this next meeting, let's just say we're talking about how aggressive can they be. If they cut by 50 basis points again in the next meeting, which was November 7th, and then they cut by 25 the following 5 meetings after that, that just gets them to the highest probability range in the chart here at 34%, and there's actually a 25% chance they go faster than that, which means they could go 50, 50, 50, as in they just did 50 in September. They could go 50 in November. They could go 50 in December, and they could go 25 for the next 4 meetings, and the market's already priced in a pretty dramatic degree that that's where it is. That is a lot of cuts into this market, man, and we will see where yields go from there. But yes, not surprising when you look at where they've risen. Now, take a look at this 30-year, okay, to finish the conversation. We talked about the 10-year. And what this has to do with, why I'm going over it, is that, man, this market is priced for so many cuts that there is, I think, greater risk that maybe they don't come with the level of cuts. Maybe we have some recency bias. We do have recency bias, which is the coolest part, because it's recency bias to the tune of 20 years. Right? That we're used to interest rates being near the zero bound, which if you listen to our man Larry Pesavento, man, he was out there talking about forever saying this isn't how things work. I don't understand it. Negative interest rates, why would you ever give somebody your money for a negative interest rate when you're telling them at some point in the future they can give you less money back? Economics is based on consumptions and savings, the C and the S. If you know basic economics, consumption and savings. You either consume now or you save, but if you save, you usually can consume more in the future, right? That's the incentive for savings, is it allows you greater consumption in the future. That doesn't work with negative interest rates. So there's your 10-year, but if you actually look at the 30-year, and I'm not just going back to some kind of bonkers 80s, early 80s, 20% inflationary environment, okay? Look where the 30-year was trading back in the late 90s, right? The early 2000s. 1996, the 30-year was 35 points lower, and lower price equals higher yield. We had many periods in this chart of lower price and higher yield in the 30 if you take out, of course, the recency bias of the last 15 to 20 years where things were pretty close to the zero bound. So market pricing like we're going to drop rates to the tune of 2% almost over the next 9 months, and we will find out where we go from there. Let's check in on some of the equities that are moving. We check in on Intel. As the suitors are coming after them, Intel shares up by 2.3% again, following the move on Friday. Qualcomm steadying the ship. They're flat at 169. We jump over to NVIDIA, up by 0.3%. Amazon's flat at 191. We jump over to Apple shares, down about 0.3% for Apple shares. Quite the sell-off on Friday. The final few minutes, down to 228. We're trading right now at 227.46 for Apple shares. Checking on some of those others. AMD right now trading at 156 as well. All right, we check back in on gold. Excuse me. There it is. Just made an all-time high within this 5 minutes we're in right now. 25.68. Man, you talk about it. So, folks, today, it's Monday. New issue of the Gold Report comes out. Head on over to the front page of TFNN. You can check out my dad's Gold Report right there on the front page. And yeah, new issues out there. Great time to get into it. We'll have to update some of those totals. But yeah, check out the Gold Report. You gain access to the archives. You can sign up. The Gold Report, $119 a month, or you can sign up for $559 for 6 months, a savings of almost 23% or $133, or you can save almost $400, a savings of $379. You sign up for the year for $985. All of these come with a 30-day money-back guarantee. So if you're thinking about keeping the subscription, I encourage you to think about the 6 month, the year. You still can cancel anytime within 30 days for new subscribers. You get a full money-back guarantee, and a great time to do it today when we got a new issue out there for the Gold Report. And yeah, my dad will be back this afternoon. He was away a little vacation last week. He's ready. He's charged. We got the S&Ps up by 8, but we got a little rollover. We got the Dow. Check that out, right? Dow negative by 17 right now. You got the Russell rolls over as well. We're flat. Bitcoin trading at 63,000. We take a look at a longer-term chart of Bitcoin. Yeah, just off the highs of 74,000 earlier this year. We jump over to the dollar index. DXY trading at 192 right now. But boy, with those amount of rate cuts priced in, I mean, imagine, and the reason why I go on it, don't imagine, think about the fact, okay? I just went over that by June, the Fed is pricing in, right, 1.75 to 2 full percentage points of cuts by June, which is only 6 meetings. There is a very real chance, folks, that the Fed continues to cut, just not to the degree that is priced in, and you actually have yields rise slightly over that period of time. It's one of the scenarios you want to be thinking about. We got the S&Ps up by 8. One more segment, folks. Don't go away. We'll come back, finish it up. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. I got a chart on Microsoft up here. Microsoft right now negative by about 0.5%. And yeah, I'm not sure. I think you got to log out, log back in potentially for this market watch heat map sometimes to update on the open. But nonetheless, this one is live now. You get the NASDAQ 100 positive by 51 points. But as you can see, right, a lot of red on this chart with the big dogs. Apple in the negative. Microsoft in the negative. Broadcom in the negative right now. AMD as well. You got Micron trading higher by almost 4%. Tesla almost higher by 4% as well. Meta up by 1.2. Google shares up. Amazon slightly in the red. And then you jump over to here. Constellation Energy. Yeah, up by 5.6%. We'll jump to them in a moment. They're the ones who are going to be running that nuclear reactor from Microsoft for 20 years. You jump over the Dow. Yeah, Dow in the red. And yeah, you got Home Depot in the red, Apple, Microsoft, Amazon, JP Morgan in the red as well, Visa in the positive, Walmart up by about 0.7%. Intel, one of those equities, but guess what? Intel doesn't matter when you're $22 equity trading in a price-weighted index like the Dow. $22. They're going to get the boot from the Dow, man, because that makes 0 sense. Even when you get into, Coca-Cola, you're only talking about $70. Verizon, only $44. And then you jump to an equity like Home Depot that's $388. Makes no sense whatsoever. NASDAQ 100, Tesla shares up there as well. But yes, you jump over to Constellation Energy, quite an acceleration for them. They're getting some upgrades. Thursday, they were trading at 207. News breaks, they're starting nuclear reactors again for Microsoft, and you're trading at 270. You're up another 5.6% so far this morning. There's your daily chart, way above. And look at how we open at the highs that we had in May, and it's just been a rocket ship since then, man. We're trading at 271. There's your daily going back a year. You stretch this back on a monthly, and that's as far as it goes to $42 in February of 2022. S&Ps right now up by 8 points, chopping around 57.70, and we finish it up with gold. There it is, folks, as we speak. All-time highs on gold, 26.59, 26.59. Check out that gold report, folks. If you've subscribed before, great time to get back in there. If you've never tried it out, great time to try out the gold report. New issue out this morning. You gain access to the archives as well. Stay tuned, folks. We got our man Basil Chapman up next with the Tiger Technicians Hour. I'll see you tomorrow. Have a great Monday, everybody.